All right, let's get started. This is Josh from the Zoey team welcoming you to our latest merchant webinar. Obviously, every time we do this, we hope to bring some helpful information to all of you and ensure that you're making the most of your business. Today, we are going to be talking about sales tax, which isn't the most sexy topic on the surface, but underneath, it's a really important aspect of any business that's selling online and making sure that you're compliant with these rules. And unfortunately, because sales tax is a state-by-state issue, in many cases, these rules can get very complex very quickly. And that's even more so with some of the changes that have happened recently. So today we're presenting with Avalara some information about the changing sales tax Nexus rules and what they mean for you now. So we'll have Brandon with us momentarily to speak about this, but we do want to remind you how you can participate, and for those of you who are new to this, what you can do. There is a questions capability inside the software that we use, and you can submit your questions throughout the presentation. When we complete the presentation, we will review those questions right here on the webinar and answer them for you to our best ability. We have plenty of time for Q&A at the end, so don't worry about that. And if you come up with any questions after the fact, or if you're watching a recording, we can still take your questions in. Just email me. My email address is at the end of this presentation. We want to remind you that this is part of a series, so you can join us at zoey.com/webinars to see what's going to be coming up. We have 2 webinars we'll be announcing shortly, so we'll be continuing the series into the summer. We also have recordings of previous webinars, over 25 of them in all, which you can watch either on that page or on YouTube. And if you are new to Avalara and sales tax more generally, we wanted to remind you that Avalara is one of the apps in Zoey's App Store. So you can go to zoey.com/apps/Avalara or search Avalara in the App Store to find it. We also recently published a blog that's connected to this webinar, which includes an actual guide that you can download. So you can go to blog.zoey.com and search for that post. You can see it pictured there. It was posted last month to get your free copy. So definitely don't miss out on that opportunity as well. And with that, I'd like to introduce Brandon Cole of Avalara. He's going to take over at this point and present to you our topic today, which is around these changing rules.
Awesome. Thanks, Josh. And give me one moment while I share my screen. And Josh, can you just confirm that the audience can see?
Absolutely. I see your slides.
Awesome. Awesome. Well, good afternoon, everyone, or good morning, just depending upon where you're located around the country. I'm Brandon Cole here with Avalara, and I'm one of the partner development managers here. I appreciate everyone joining the call, especially as Josh said, this is not people's favorite topic to discuss. It generally makes the bottom of the list in terms of their favorites. So I appreciate everyone joining. As Josh mentioned, today we'll do a quick overview of the economic nexus ruling and what that means for you guys as a business, and then also take a look at what it, does it make sense for your business to automate sales tax and compliance. So let's go ahead and dive right in. So here's who's actually presenting today. Like I mentioned, I'm Brandon Cole, and I work out of our Durham, North Carolina office. Most people know that we're headquartered out of Seattle, but we have a lot of employees that work out of the East Coast as well. I joined Avalara towards the tail end of 2014, and it's really hard to believe that I'm going to be celebrating my 5-year anniversary here at the end of the year. I did spend the last 3 years on our account management team, working with about 200 different customers around the Chicago and Minneapolis markets. I guess one other thing I'll say is that I have a little more hair on my head than in that picture taken from 2 years ago, and a little more gray as well. So I like to just keep myself humble with the photo. So let's just dive right in, like I mentioned, and see what we're going to be covering today. So first, we're going to take a look at who is Avalara. We're going to take a look at Nexus and what physical presence is prior to all this chaos with the ruling from last year. We're then going to look at the ruling and give you a full explanation, show you some other resources outside of what Josh mentioned, and really just take a look at what it means for your guys' organization, both now and moving forward. We'll take a look at what it means to automate with Avalara. We'll also, as part of that, we'll look at what the Zoey app looks like in the instruction, the implementation instructions, and then we'll also look at a live demo of the actual Avalara admin console as well. Like Josh mentioned, my contact information will also be available at the end for the Q&A, and I encourage any and everybody to schedule time with me if necessary. So who is Avalara? So we were founded back in 2004. So we're not just another player here in the sales tax industry. We were actually one that helped to disrupt the sales tax industry years ago. And we've done this through automating via a SaaS model or software. And so to accomplish this, we help to automate sales tax in 3 different ways. One of them is sales tax calculation, which we'll look at today within the Zoey app. Another way is exemption certificate management. And third, it's returns, filings, and remittance. So of that, we have over 20,000 active customers. We have more than 700 pre-built integrations, with Zoey obviously being one of them. And just to show you guys, kind of the size and scalability of Avalara, just last year alone, we processed over 9 billion transactions through the platform itself. A lot of which you can imagine came on Black Friday and Cyber Monday. We managed over just about 22 million exemption certificates for our customers. And then we prepared and remitted nearly $37 billion in sales tax. So let's take a look at what you need to know and do to be fully compliant. First, we're going to take a look at what Nexus is. And for a lot of you folks, this is likely going to be a review. But sales tax Nexus is the connection between a seller, or you guys, and a state that requires you as a seller to collect and remit tax on sales made into that state. So most of you know that, think about where you guys are headquartered, where you guys have employees. Anything physical is pretty much what likely gave you a sales tax requirement leading up until about this time last year. So some of those items, as I mentioned, property or real estate, sales reps, whether they're remote or if they travel, event attendance, whether that can be a trade show or conference, storing inventory across the country in warehouses, or even with fulfillment by Amazon. And then other ways such as delivery and distribution. So if you deliver with your own trucks, you guys may also have a requirement to collect sales tax in that state, just from a physical perspective. So then let's just jump very quickly to just take a look at why sales tax is so hard. So this is probably a pretty weird analogy, and I'm sure most people are probably thinking of Titanic when I'm showing this iceberg. But we like to say that sales tax rates are just the tip of the iceberg. So it may look easy on the surface, but then obviously the danger is what lies underneath. So taking a look at that, there's 6 or 7 things that you need to consider when it comes to sales tax in general and calculating the correct rate. One of them is you have to figure out if you've established Nexus somewhere. So whether that's in a state where you have an employee, or even now moving forward with some of these new economic Nexus rules that we'll be looking at. And then you have to get registered. And obviously every state is different from a sales tax perspective. Every registration is different. So you're having to figure out how to, ultimately start to begin to collecting sales tax in a state with the Nexus part of it first. Second is product taxability. So if you're selling a widget or you're selling, some sort of product, you then have to understand how is that product taxable in the state. Something like freight can have varying taxability across the country, where some states say, yes, that is taxable, and some states say that it's not. Next, you have jurisdiction assignment. So if you think about some of the crazier places to collect tax, like California or Colorado, where there's a lot of local taxes that make up the total tax rate in an area, trying to figure out which jurisdiction to assign to that rate can also be rather hard and confusing. Next is having your exemption certificates in order, making sure that you have the right form, making sure that it's valid, that it's signed by your customer, and just making sure that you have it for paper trail reasons. Next, you have just the state and local tax prep and filing. So obviously, similar to what we talked about before with product taxability and even getting registered, every state has a different form. They may give you a different filing frequency. So trying to keep up with it all is literally just a full-time job in itself. And then throw on top of that, being prepared for an audit if it happens. Most people I talk to may have never been audited, but then there's a handful of people that have, and they say, yep, they were audited once, whether it was good or bad, they can anticipate the auditor coming back at some point in time. So obviously, looking at all these things underneath the iceberg and just, complying with all those, but also being audit ready when the time is appropriate. So now let's take a look at what has changed then in the last year. So economic nexus was imposed nearly a year ago as a result from the South Dakota versus Wayfair decision. South Dakota basically argued that, hey, the times have changed. Something called the internet has come along, and you no longer have to sell or solicit business by physically going into a state. Wayfair cited the Quill case, which many of you are familiar with, which basically set precedents that, hey, we are not physically going into South Dakota, so therefore we don't have to collect. Well, lo and behold, the Supreme Court stepped in and ruled in South Dakota's favor, and from that point forward, economic nexus started. So I want everybody to bear in mind that these rules are in addition to the physical rules that we looked at a few slides ago, not in replacement of. So everything that's physical still applies. So if you have traveling reps, if you open a new building, those types of things can still trigger sales tax. But now economic nexus are just additional rules that you have to comply with. So these rules focus on the level of economic activity within a state, generally in the form of sales revenue, transaction volume, or both. And, you know, like most states, they obviously vary state by state, as I mentioned, and all pretty much were built to level the playing field between non-collecting out-of-state sellers and then the brick and mortar businesses that are within those states. So it's funny because I've had a handful of conversations where people come on the phone and are pretty upset and would just love to get into a room with some officials from South Dakota because, you know, obviously that was just the first domino to fall, and now there's been all these changes ever since. So nearly all the states that have sales tax, there's 5 states that don't have a sales tax, but everything in blue has basically adopted an economic nexus threshold. A majority of these started enforcing last year, while a lot have published thresholds here in 2019. So I'm going to quickly switch over to a live blog that we started publishing when the case went final last year, because even looking at some of this information here, it actually may already be out of date, you know, a day later. So let's take a quick look. And I can send this out at the very end along with my contact information. But as I mentioned, any state in blue now has an economic nexus threshold. Obviously, that first domino to fall, as I mentioned, was South Dakota. And so, you know, that was the only state that was highlighted. But as you can see, again, nearly the entire country has these laws. So each state then has an evaluation period and an effective start date. So, for example, Alabama's was towards the end of last year, while Arkansas was July 1st of this year, so it's upcoming. And even if you guys spend time on this blog, if you click any of the orange hyperlinks, it's either going to bring you to another part of the blog, or it's going to bring you directly to the Department of Revenue's website for each respective state and what the ruling actually means for those folks. Next, each state then has a defined threshold, and I would say for the most part, the rule of thumb is about $100,000 in sales or 200 separate transactions. Now, obviously, just, you know, kind of looking at here at initial glance, there are some that fall outside of that, like Alabama, like California. But the rule of thumb across the board is typically $100,000 or 200 separate transactions. We're also seeing a lot of changes where states like Minnesota are adopting a threshold, but then are quickly evolving or changing what it is. So instead of saying, hey, you have to hit this threshold in a period of 12 consecutive months, they're now saying, hey, effective at the end of this year, we are going to make some changes, and you guys now must comply with these. So it's ever changing, ever evolving, and we keep this blog up to date just about once a week. So I'm happy to share that out with everybody. But on top of the actual threshold itself, each state then defines a transaction in a different way. And so most states may say, hey, we're just going to look at gross sales or gross proceeds into the state, while some may include sales that are or are not taxable as part of that total evaluation. Other instances, if you have exempt sales, I've had plenty of conversations where folks say, hey, 100% of our sales into some of these states are exempt. Well, some states may still count those, while others may leave that out. And even with that, others may leave off just the exempt sales for resale. So just a number of different things that you know, you have to keep up with. And then on top of that, there are other forms of remote seller nexus, what a lot of people are calling these Amazon laws, where places like Amazon or eBay are also having to comply, where they may collect on your behalf, or they may actually require you to collect and remit on your behalf. So just a number of different changes that have happened here over the last year or so, and even a lot that's going on this year. One thing that we generally recommend for folks as they're, you know, evaluating some of this information is, you know, even making an Excel spreadsheet, just, you know, going state by state, exporting some of your sales data, whether that's, you know, the number of transactions and the, you know, dollars of sales that are going into each of these states, and then comparing them, you know, to the spreadsheet that's here on this page. A lot of that's just, going to be, hey, let's focus on maybe some of those higher states. Let's take a look at the ones that are meeting at least $100,000 level, and then we can scrub it a little further and go say, hey, nope, that's California, that's 500,000 instead of 100,000. We can cross it off the list. But it really helps just get into the mindset of, hey, let's make sure we're being proactive with evaluating all these, especially as they're changing so constantly. So we're going to jump back to the PowerPoint then, and I'm sure there's going to be a lot of questions about these changes, and I'm happy to address those towards the end. But let's jump back to the PowerPoint. And let's take a look at what it means to automate with Avalara. So as I mentioned before, I gave you some of those statistics of, the number of transactions that came through, the number of exemption certificates that we, manage, and then the number of sales or, tax dollars that we remit on behalf of our customers. So really, if you think about Avalara in those three ways, we have the tax calculation engine that's plugged into Zoey. So any traffic that's coming through your site, we can help automate and calculate the sales tax on those orders. Some of those things or some of those factors that we look at in those situations are, where the items are going, where they're being sold, whether the sale is exempt, whether that sale is even taxable, amongst other things. So some of those items that we talked about on the iceberg itself are things that we look at to then calculate a sales tax rate and not just deliver a rate based on a zip code, because it's not always the most accurate. Second, if you think about your exempt sales, whether that's for nonprofits or government entities or folks for resale, we can help manage the exemption certificates that come along with them. We can help validate them. And if you're missing some for any of your customer base, we can also help you request them as part of the software solution. And then lastly, because all of your transactions live within the system, or if there's some that you need to get into the system, whether it's a marketplace or just other sales means, then we can help file your returns on your behalf. And really what that looks like to you guys is, if you think about all the states that you're in now, whether that's 1 or 5 or 20, you're having to log into different states' Department of Revenue's website. You're having to file the forms as they're due on an annual or quarterly or monthly basis. You're then having to cut checks to the different jurisdictions. So one way that we help automate that is file all the returns on your behalf and then do a single ACH pull for the total tax liability due, and we pay the states on your behalf. So no longer having to go into each state's website, cut different checks, and just keep up with those frequencies themselves. On top of that, we do have a list of advisory services that we can assist with, some of which include a Nexus study. So if you guys had additional questions outside of, hey, yeah, we may or may not be meeting the threshold from an economic Nexus perspective, then let's take a look at maybe some of the physical triggers that we could have hit a long time ago. We can also help with some voluntary compliance. So if you should have gotten registered a long time ago and remitted, or calculated and remitted and you never did, we can help with voluntary compliance. And part of what I mentioned as well, if you guys needed help with sales tax or exemption certificates, we have a full team of managed services that can assist with some of the labor that's outside of the actual automation that's included in the automation offerings. Next is the SST program. So when I talk to folks, they have some level of understanding about this, but I don't think that they know the depths of what it means for them as a company and some of the benefits they are partnering with Avalara. So the SST program is the result of a cooperative effort between state and local governments and the business community. So the goal of it is to simplify sales tax collection and administration, particularly for customers or companies, selling into multiple states. So long story short, it's a way to help make sales tax easier. Now, many of you are probably thinking, hey, that's an oxymoron. Sales tax and easy don't go together. They don't belong in the same sentence. But this is an effort that actually does make it a bit easier. And previously, up until maybe a month or two ago, you had to actually opt into the 24 member states. So it was kind of this all in or all out solution that was based on the SST program's requirements. But there's been some recent changes to the program where you can now just choose to opt into the states where you need to comply. So if you guys want to sign up for the program and you guys qualify, you actually can receive some added benefits by partnering with Avalara. Some of that includes free registration, free tax calculation, free returns preparation and filing, and you also shift the audit risk from yourselves to Avalara in the SST state. So I just want to pause for 1 second and take a look at the map. So anywhere you see kind of that black cautionary triangle shows states that are have economic nexus thresholds based on gross sales. And then if you look at the green states, those are the SST member states. So there is some overlap. So if you are truly a remote seller into some of these states and you're meeting some of those thresholds, you actually may apply or may qualify, I should say, for the SST program and can take advantage of a lot of these added benefits. So think of this as a great way to help achieve compliance while also keeping costs in check. So then let's pivot very quickly, and we're just going to take a look at Avalara and the actual integration with Zoey. So give me 1 second, and I'll get it fired back up here. So as Josh mentioned, you can find the app within the Zoey App Store. And once it's downloaded and you sign up with Avalara, you're able to just follow these steps. And Zoey's been amazing to work with because they've helped make the implementation process so easy. Literally everything is documented here on their website. So when you sign up, you'll actually receive an account number and a license key and some of the other pertinent information that you see here. So you'll just follow the steps, make sure that all these things are enabled within the Zoey side of the house. And then you'll quickly pivot over to the Avalara console, which I'll do now. So from there, when it's enabled in the Zoey App Store, you'll then come to the settings, and some of the remaining information that you're going to want to give us is where you collect tax. So those Nexus states, whether it's those current states where you're headquartered or have salespeople or are starting to hit some of those economic Nexus thresholds, or if it's down the road when you start meeting others, this is where you'll come in to actually enable some of those Nexus states. From there, you also want to tell us what you sell. So like I mentioned, something like a widget or even freight may have varying taxability across the country. So mapping an item to a tax code helps ensure that you're not having to do the research and that the item is taxing appropriately across the country. And then obviously you want to tell us where your company is located so we can help determine that as part of the tax call of the ship from and ship to location as well. So to pivot back to the home screen of the console, you can see right away, we actually help you guys keep track of the economic nexus threshold. So anything that you see in yellow, so in this example, it's just the one state of Alabama, if you hit 80% or higher in the state based on the threshold, it will show up in yellow and say, hey, you may want to consider getting registered here as you're getting close to meeting the threshold. Then anything that shows up in orange means that you guys have already hit the threshold and need to get registered to comply. So this is all just available right here on your home screen as you log in. As you're passing over the transactions, we help keep track of those transactions across the country, and then you can expand out the entire list to see the states that you need to comply in. Next, we're going to jump. I'll just show you a sample transaction, which you will likely come over. And this was happening right before the call. Of course, you start to have these technical issues as soon as you're trying to share your screen with the world. So we'll just give it another second to load back up here. And I'll come down to a transaction that I was looking at earlier. So let's just say somebody comes on your site. They are based in Arcadia, California, and they said, hey, I want you to ship, XYZ item to me from Seattle to Arcadia. So in this example, you can see the full breakdown of the item that was sold, the total amount, and then whether tax was assessed. So in this situation, a taxable item was sold to Arcadia, California. My California geography is really bad, so I have no idea where Arcadia is. But as part of this sale, there was four jurisdictions that were included in the total sales tax rate for Arcadia, California. So there's a state, a county, and 2 special tax rates, which comprise a total 9.5% of tax for this specific item. You can see the total taxable amount then, it was $1,000, which was the total amount of the item. and then the total taxes that were assessed based on jurisdiction for a total of $95 in tax. If you scroll down, you can then look at freight. So if you guys remember from earlier in the discussion, something like freight can have varying taxability across the country. So in this situation, the 4 levels of sales tax for Arcadia were still assessed 9.5%, but because you mapped freight to one of our tax codes, there was actually no tax that was assessed for the freight for this transaction. So if you think about it, if you guys are based in, let's just say North Carolina like I am, and you now have to comply in California, well, you likely would have to then look up whether or not, hey, are my items taxable in California? What are the rates in California? What are those jurisdictions that make it up in California? And then, even something like freight may or may not be taxable in California as well. So through automating this, you no longer have to necessarily worry about the taxability of these items as you're just mapping them to a tax code, and then business as usual moving forward, allowing people to buy your items through the Zoey store itself. Now, if you have exempt sales, we'll just quickly go through this and show you what it looks like to put in your exempt customers. So through this, you're able to actually share with us your exempt data. So if you only wanted to pass, hey, let's give you the company name, let's give you the exempt reason, let's maybe even give you their exemption number, then you can just pass us the actual exemption data itself. You don't necessarily have to upload your certificates. But if you think about from an audit trail purpose and making sure your documentation is in order, then it may make sense to actually upload your documents here. I know a majority of the folks I talk to, if they're manually doing sales tax, then they have some sort of folder or binder or filing cabinet where they keep a lot of these forms, and they describe it as, hey, it's just a place where the forms go to die because they never pull them out or look at them or anything like that. And this is a better way to just digitize your forms themselves and help be more proactive about them. If you're missing a form for a customer, you can request a certificate, put their name, put their email, and add a note saying, hey, here at XYZ company, we're trying to update our records. If you don't send us back a certificate, then we're going to charge you tax. Oh, I clicked the wrong one anyway. So from a returns perspective, I think my audio went down.
I can still hear you.
Oh, well, I think my screen share went down. Actually, I just checked my internet in my home office and it wasn't working. So.
Okay.
Can you guys still see my screen?
Yeah, we can still see your screen.
Okay, that's weird because it's saying that you can't, but okay, we'll let it load back up then. Looks like I just had like a blip in my internet. So give me 1 second, we'll get this loaded back up here.
And while you're doing that, maybe there's a couple things I can quickly note about Zoey. So and the Avalara integration. For those who are listening in and wondering a little bit about this, first off, Avalara has the most complete integration from a sales tax perspective on Zoey than any other product. Avalara's system supports quotes and the ability to calculate tax as long as the proper information is present. As you heard Brandon mention, there is some important factors like, billing and shipping information that sometimes comes into play when it determines whether tax is applicable or not. So obviously, if that information is missing, it's not possible, but if you have the information needed to calculate, it can do so. And then also keep in mind that when it comes to the ability for you to sell B2B and B2C on the same site. That was the other thing I wanted to mention. There's the ability to use your customer group's capabilities to group those who are exempt versus non-exempt and attach the right code so Avalara will know which customers should be in the taxable group and which should not be. So if you're doing reselling, wholesaling, that sort of thing, you do have the ability to configure Zoey to make sure that that's done pretty seamlessly. And then the right calculations will be taking place for each group. So that's all a part of this and part of what's supported. So that really does make it pretty granular and seamless for our customers who have a number of different scenarios that they're working through with their customers.
Awesome. Thanks, Josh. I appear to be back up and running.
Yes.
Let's just take a look.
Yeah, we got your slides up right now. Okay. It's an Avalara demo.
Okay. Making sure my browsers are still working.
No worries.
Okay. I will switch back now. I appreciate everyone's patience.
And actually, before you continue, I did see someone raise their hand.
Yep.
Please remember to submit your questions through the questions panel, and we'll be happy to address them at the end of the presentation, because I know that there's probably quite a few questions about this topic, given the complexity. So,
Sure. Thanks, Josh. And so the next point I was going to make, and again, sorry for the the interruption there, is just a matter of getting your return set up. And so if you think about, again, the places where you have to calculate and remit and file, you literally would just come into the system, add a tax form. So I always use the North Carolina example since that's where I'm based. And I come in and would choose the proper form. And in this case, there's only one for North Carolina, but some other places may have more based on sales and use tax and different requirements. And then you give us your e-file credentials. You also give us, the frequency of the form itself and a few other bits of pertinent information. And you click save, and then the return is then validated in queue to be filed. From there, the way to actually manage and approve the returns is you come in, and for demo's sake, there's likely not going to be any sales tax liability that's showing here because they're all just fake transactions. But you would look at, basically all the states in which you're required to, file taxes. Obviously, you can see Canada here as one of them, or the country of Canada, I guess. So you would see the total tax liability that's due based on the frequency in which you're required to file. And then you would come in between the 5th and the 10th of the month to then approve the sales tax liability. So instead of having to go into each state's website and actually fill out the form, really the only thing that you're doing once the form is set up is you're just coming in to approve the actual tax liability that's due either on a quarterly, annual, or monthly basis. And then the total amount will be shown here, which we would then, like I mentioned in the beginning, do a single ACH pull from your account for the tax liability, and then divvy that up amongst the states for the respective amounts that's shown. And then from a reports perspective, I'll just quickly jump here. So think about this as, hey, you just want to run maybe a list of, customers that were exempt, or you want to look at, some of the returns you want to file yourself, maybe outside of SST. We have about 50 different reports that you can run, 15 of which are geared more towards, folks trying to reconcile and file their own returns. And then even places like California and Colorado, as I mentioned in the beginning, they actually have their own reports because those are places that are a little bit harder to file, or just require a more detailed report for those states as well. I don't know if you guys can still see my screen. It looks like I'm getting more error messages from the Dakota webinar, but I'll just keep rolling through this if you guys can bear with me.
I see the screen, but if you're moving your mouse around, it's not transmitting. So.
Okay. Well, I'll just jump back then to the PowerPoint. Let me know if you guys can see the PowerPoint itself. That was just about the end of the actual demonstration of the console, and really there's not really much else that I wanted to talk besides that. So if you guys are able to see my screen,
I'm gonna reactivate your presentation in a second here.
Okay.
Because right now it's not showing you as available. So.
Okay.
Why don't you keep talking, and we'll finish up accordingly.
Yep. So really here on my last slide was just my contact information. So my cell phone is listed, my email is listed, and then there's also a link via the Chili Piper app, which you can actually schedule time directly on my calendar. So if that is not showing at the moment, then I can certainly get that over to Josh to share with the rest of the registrants. But that was pretty much what I had in terms of. Go ahead, Josh.
I was going to say, we actually probably could paste it into the chat here in GoToWebinar as well for those who are watching live. So the phone number and the Chili Piper link. So that way, for those who'd like it, they'll have it. So apologies for the technical difficulties here, but obviously this is definitely an important topic for many of our merchants, even those of you selling wholesale, because one thing I just wrote down as a note that I actually didn't know, so even those of us who do this day to day learn things all the time, is that the non-taxable orders in certain locales can impact your Nexus for those that would be taxable. So if you're a B2B merchant, but you're also selling direct to consumer and you have enough volume in states where that rule exists, you may still have Nexus on those taxable transactions, even though you may not have had that many taxable transactions. Your B2B volume may very well impact that. So I thought that was kind of interesting. one question that usually comes up really quickly, Brandon, if you can speak to it, is
Sure.
talking about just sort of how pricing works. I know that there's not a one-size-fits-all pricing approach because obviously you're looking at what
Sure.
each customer needs, but maybe just speaking a little bit generally about what customers can expect.
Yeah, exactly. And I appreciate the question. Yeah, so I wish that my schedule meeting link was working, because then I could certainly go into pricing with folks on an individual basis, but we'll get that squared away here later. So think about pricing really in the three different ways that I mentioned, that, are the ways to think about Avalara. So Avatax, which is the integration to Zoey that does the sales tax calculation, the exemption management, and then the returns as well. And really, we look at it from a volume perspective. So we typically look at the number of transactions in states where you guys are collecting tax. We look at it from the number of exempt sales that you guys, or the number of exemption certificates that you're actually having to manage for customers. And then we're also look at it in the total number of returns that we would follow for you. So then based on that, you would fall into some sort of plan based on the volume. And then obviously if you guys qualified for SST, then that would keep some of those costs down, and we would not count the transactions in some of those SST states. We would not count the returns or the registrations in those SST states as well. So, but happy to go into that in more detail with people on an individual basis if possible.
Cool, and I think it's also important to note too that even though you don't calculate tax in every transaction, the integration is designed to share all transaction information, because Nexus can obviously change as the laws change, and also you may not hit a threshold one year and then hit it the next. To your point about sort of that map showing where you might be coming close. So all of the transactions that go through your Zoey store do get reported to Avalara, so they can make sure that if something's changing on your side, it can be flagged before it becomes a problem, and you can take the appropriate action. So I think that's another aspect of it that's important to mention and recognize as well. We did get a question in from the room asking if you're compatible with other e-commerce platforms such as Zoey. This is a Zoey-specific presentation, so we're not going to go into a complete list of everybody who does it, but Avalara is very well baked in at this point, pretty much across the ecosystem. Is that fair to say, Brandon?
Yeah, and just one other name that I'll throw out there is a lot of Zoey users that I've talked to also have QuickBooks as well.
Yes.
And so we do have integration to QuickBooks Online and Enterprise and Desktop, all the different versions as well. But yeah, we'll keep it strictly for Zoey for now.
So to the person specifically asking, yes, it is available on that platform as well as others, but forgive me, given their competitor Zoey. But some of you do use Zoey as B2B, and then you use something else for B2C, so I do want to recognize that as well. But yeah, all of the major e-commerce platforms has an Avalara integration. Avalara has been around, as Brandon mentioned, for 15 years, so at this point they're pretty well baked in pretty much anything you can think of. One other question for you regarding...
Yeah, I guess, Josh,
sorry, go ahead.
I was just going to say one more thing, and it's in the way we kind of position ourselves is that it does help to kind of future-proof your investment, because at one point in time maybe you guys weren't on Zoey, or at one point in time you're going to leave QuickBooks and go to NetSuite or something like that. So basically, being able to future-proof your investment is a good way to say, hey, to your point, hey, we have an integration with Zoey, we have an integration to a lot of other players in the ecosystem outside of just e-com as well. So accounting platforms, ERPs. And that goes back to the point on the original Avalara slide that we're pretty much built into about 700 different platforms.
Right. So obviously that continuity is huge when you're trying to make sure that you're continuing to collect taxes properly when you move from platform A to B or whatever the case may be.
Yep. Exactly.
One more question for you regarding sort of the use cases we see. So as I mentioned, we do have a number of customers that are doing B2B transactions, or they're doing B2B and B2C within one store. When it comes to evaluating Nexus and so forth, do you have any recommendations for people as far as how to best sort of take those first steps? You had sort of mentioned an Excel spreadsheet and sort of just doing some quick calculations, but I think the exempt and the reselling aspect of it can sometimes trip people up. Any recommendations you have there when they're trying to just evaluate that, and like, maybe are there certain states they should start with that may be a bit more blurry? You know what I'm saying? Like, I think not every state's got the same rules as you said, but if there's any suggestions you have there, that might be cool. Yeah,
sure. I would say just generally speaking, when I talk to various Zoey customers, they're coming into the call and they may or may not have evaluated just economic Nexus before or in general. And so what I typically would ask them to do is run a list of your sales state by state, and just include all of your revenue, whether it's an exempt sale or not, and then really focus on your bigger states, because if you have a state that you're selling into and hey, you did 5 orders with them last year for $200, then maybe that's not a state that you spend too much time on. But likely there's states that have maybe some of the bigger markets like New York and California or places like that. Those are certainly places that you may want to focus on. But I would just say look at your highest grossing states first, and then if you think that on the surface level you're meeting any of those thresholds, 100,000 or 250,000 or 200 transactions, then certainly drilling further into it would obviously help. So if it's a state that says, hey, we don't count exempt sales, but they're making your list in terms of just the volume itself, then further evaluation could say, hey, we can actually cross them off the list because we don't meet it, because based on them kind of exempting our exempt sales, if you will.
Yeah,
does that help?
It does. And I would note that aside from just doing direct exports from Zoey, our merchants also have access to Glue Analytics, which is our analytics platform available. So there is a lot of reporting capabilities, which includes the ability to break things down geographically. So you might find just doing some quick gut checking in there versus doing a bunch of exporting into Excel may be even quicker, just to understand right. If you're hitting those minimum targets. But yeah, I mean, I think it's clear if you don't have many transactions, you're likely not going to hit that thing. But if you're seeing the number of transactions are pretty high, or definitely from a revenue value is high, you're probably going to need to do a little bit more homework to see if that's going to qualify.
Right. Yep. Exactly.
Great. Well, give you 1 or 2 more minutes to submit your questions. While we're doing so, I do want to remind everybody. Let's see here. I think I'm going backwards. Yes.
Hey, Josh, are you able to share my contact information slide with the group?
I'm going to pull that up while we're talking here because I'm not able to pass presentation back to you yet. So I'm going to pull that up while I'm mentioning the following. So for those of you watching today, we'd love to hear your feedback about this presentation and whether you found it valuable. Also, if there's any topics we didn't hit on that you might find useful in a future presentation, please definitely let us know by emailing me at josh@zoey.com. That also includes just if you have any questions that came up that you didn't think of during the presentation, or if you're watching the recording back and you're hoping to ask your question nonetheless. So definitely keep that in mind. We obviously want to make sure that this is useful for you, so definitely let us know how we can make that happen. And don't forget that we will be announcing 2 more webinars here in the coming weeks. We'll display them first at our webinars page at zoey.com/webinars. We'll also have recordings of previous webinars available to you there, including this one within the next 24 to 48 hours. And we'll also make these available on YouTube, so don't worry if you can't find that page, because our YouTube channel will have it as well. And then finally, before we say thank you and give you one more chance to ask questions, let me just switch my screen so you can see this. So this is Brandon's information. You can have his cell phone and his email address there, as well as that Chili Piper meeting link, which I'm going to quickly grab, and I'm going to paste it right into the chat so it's a little bit easier than trying to write that whole thing down. So if you would like to speak to Brandon, definitely use that to reach out, and he'll be able to help you out. I will note, since we launched the app on Zoey, this has actually been one of our quickest sort of apps in terms of adoption within the Zoey ecosystem. If you're a customer and you know it's been only in there for a few months, you're not going to be a guinea pig. We've already done some very thorough testing, and I think that's actually something we should mention, Brandon, is that we've been certified by Avalara for both sales tax and refunds. So that means that their team has done a very thorough inspection. We actually went through more than 100 different tests for these 2 different aspects of managing sales tax. So they've reviewed it. They've looked at how we've integrated it. We've run a number of order tests, shown how sales tax passes back and forth before we even launched it. So as a customer, you're already guaranteed that we've done a very thorough checking. Now, there will be situations where things may pop up, and when those things happen, as a supported app, these things get addressed very quickly, and we work with our merchants to resolve them very fast. So keep that in mind as well. That's part of what you get when you select a certified app on Avalara side and a supported app on the Zoey side. So I don't see any more questions that have come in. So given that, remember, again, if you'd like to learn more information about Avalara, definitely reach out to Brandon. You can also check out their app page on Zoey. Just search Avalara in the App Store. And you can also grab that sales tax guide, which has got a little bit of additional information above and beyond what we've covered here on the call today, that you can dive in a bit deeper. So definitely grab that. It's free for all Zoey merchants if you are interested. With that, thank you so much, Brandon, for joining us today. Really appreciate this information and your time.
Yeah, thanks everyone for attending, and thanks Josh for helping to set this up. I appreciate it, everyone.
Absolutely, and
thanks sorry again for the technical difficulties.
Absolutely, and thanks to all of you who joined us today. We'll see you in a few weeks for the next Zoey Merchant webinar. Until then, thanks for joining us.